What's up, guys? This is Ty Zen again. In my previous video, guys, when I was riding the hotel shuttle, I told you guys that Factom is at a decent buy point at this moment because I believe that within the next this is in March of the end of March 2016 here, and I believe that within the next few weeks here, once they get everything straight with Factom at Factom Incorporated, they'll probably announce how much money they raise in China. So let me go ahead and show you guys how I figure out where the entry for this is. Okay. So now keep in mind, guys, when I got into Factom, I got in like right around here where the launch began. This is 2 millibits, and I got in like right around the 2 millibit area, and I took it all the way up to here, and then when it pulled back, I took profits somewhere around here when it started to break this low on this red candle. I started to take profits on that. So basically, I got in at 2 millibits and got out at like a little bit over 5 millibits, and then I still left some in there to keep running, okay? Because I took my profits off, got 100% profits, so I left the balance in there to see what it'll do, okay? So the balance I leave in there is what I call my lottery ticket to see if it'll go big. But I already made a 100% profit on this. Now, what I did was on this, guys, I marked a thick green line here to represent the support level, and I put a thick red line up here to represent the resistance level, okay? Now, you'll notice I put a thin green line here just to put a temporary or a smaller support level. This support level is not as important as this one right here where the launch of this price movement began, so that's why the lines are thinner, okay? Now I'm going to come over here and grab me a trend line, a parallel channel, guys. If you don't have a parallel channel, then use a trend line. Okay, so if we put the trend line here on the daily charts, we can see that that's about where the trend is. Obviously, it's at a 45-degree angle trend, so that's a very, very healthy trend right there. So we're going to zoom in to the short term on this, and I'm going to draw another channel here so you guys can see what I'm talking about. In the short term, there's also one going on here. Okay. Now let me just color code this a different color. We just choose orange, just because it's a complementary to purple, close to a complementary. Okay, so there's several places that you guys can get in at. Okay, obviously the ideal place to get in is at the point of confluence or the intersection of support and resistance and a trend line. So right here would be the ideal sweet spot that you want to enter the trade right here. Okay, somewhere in this area right there is where you would want to get in at when the price hits here. Now, in case the price hits this, this is what we call the purple line is what we call the long-term trend line, guys, and then the intermediate term or the shorter term trend is right here where the orange line is at. So let's jump down to a 4-hour chart, guys, and the reason why we're doing that is I want you guys to imagine this. Okay, I want you to imagine zooming in to a Google Maps, and if you were trying to shoot a missile at this target right here, you were trying to hit this target, then you can just knock out a whole city right there. But what we do is by jumping down to a smaller time frame, we get to zoom in and be a little bit more accurate so that whenever you shoot your missile and take a shot, you're not going to blow up a whole city just to take out one terrace cell that's in a garage somewhere or something. Okay, so in the short term right here, there is a trend right here. So what we're going to do is we're going to adjust that to hit the area here. And remember, guys, when I draw my trend line, there's different ways that different people do it. What I do is I just do what I call a majority hits rule, and you guys notice how it hit that point right there. There's another second touch point, there's another third touch point, and a fourth touch point. So notice how it is hugging every time it hits this orange trend line. It's been hugging that line. Now in the short term, I would look for to bring, since we are looking at the short term to make it fair, we are going to bring this trend line in somewhere right there, just like that, because we're measuring the intermediate term. We're not looking at the long term. And we can even put it right here to hit those two wicks right there, or we can put it up here. But if you notice, we hit here, we only hit one wick. So that's why I'm putting it like right about here. Okay, right about there, so that it hits the corners of those bodies like that. So now, if you notice how usually when price falls, it falls pretty fast. Notice that little gap right there. I'm going to zoom in, but notice how now you are like the drop in price is going very slow and gradual, and it's losing steam, it's losing momentum. The reason why we know that is notice how the candles are very short. Remember, guys, you don't need no fancy stupid indicators to tell you how to read price. I'm showing you guys right now, and this process that I'm showing you guys how to trade and invest in cryptocurrencies is what's called reading the price action. Okay, you're not worried about reading indicators and all that fancy stupid signals. Okay, you're reading the price of what it's doing. The reason why it's slowing down right here because it's coming and hugging this trend line. Okay, so right now is actually a really ideal spot to go long right here. Okay, so if you go long right here, always measure the amount of risk that you're taking. Okay, so you get this risk and reward tool right here, and let's just say that we get in long right there, and we get in, I like to put it like this and stretch it out so that the labels are out the way right there. And then let's just say that we put the stop below this low right here, below this the bottom of this tail right here, guys, right? Let's say that you take that much risk. Now, the way that you measure the potential reward is you grab one of the trend lines right here, and you notice the angle in which it goes up. So if you measure from here to here, notice how it goes at that steep of an angle, right? And then if you notice here also, right here, that's similar to it. But what I like to do is I like to be more conservative and take the less. I'm going to take that lower angle right there. So it's more of like a 60 degrees. Whereas before, if you took this angle right here, right, the way that you can do that is you can measure it from the bottom of this pivot all the way to the top right there. Okay. Or you can just draw a simple trend line like this. I like to be conservative and expect it to take longer, okay, to get there. So what I'm going to do is I'm going to draw that out like that. You guys see that? I draw it from one side of the channel to the other side of the channel, and all I'm doing is I'm projecting it out to about right there. So when we come up to here, we look for a whole even round numbers. So you guys notice that there's a right here, notice that there's an intersection with that resistance level right there at the top of that wick right there, and you might even go with the top of that one too. So in that area right there, around the 55 to 56 about 5.5 millibit area right there, you can expect to project that as your target, and then you can pull this up to about that area. So it's going to hit the top of this resistance or that resistance, and we can expect a pullback. And if you guys look at the pullback on something like this, we can do the same thing. We can measure from the top up there to right here, and we notice that we can expect this right here. Now, this is not perfect, guys. This is not perfect, but what we do is we have a target. At least we have some clue or some idea of what to expect. Okay, so let me remove this. Ideally, like I said, guys, ideally you want it to hit this area right here before you go long, but there's a possibility that it can launch from here because it's hitting the short term, the intermediate term trend line, and then it can take off from there. All right, from the 4-hour chart right there. Now, if you get stopped out of this one, then you would want to get back in somewhere around here near the purple trend line, and near this purple trend line and this green support line right here. So this area of confluence or this intersection right here. Remember, on the main street, guys, we just call that an intersection. On Wall Street, they like to call that an area of confluence. Okay, so right here, if we go long right now as I'm speaking, then we can project it out to come up to here. And as you guys can clearly see, the risk to reward here, if you're not good in math like I am, you just let the computer calculate it for you, and it says that it's a 3.6 to 1 reward. So we always want to look for something that has at least a 3 to 1 or better. That way, when we're wrong two-thirds of our trades, and we lose on 2/3 of our trades, we can still have a chance to make profits, even though we're only profitable 1/3 of the time. Okay. Now, just keep in mind, guys, that if this was to hit this area right here, you guys see this resistance around that area. If it hits that area only, you can see that we still have at least 3.2 to 1 risk to reward. Okay. Now, if you really want to take some really good risk, if you get in right here, and let's just say that it breaks the low of this right here, well, then you have an 8 to 1 risk to reward. And then if you put your risk out to here below this, these tails right here, then you have a risk of about 4.8, 4.5 to 1. So that's up to you guys. That's a personal preference. Now, keep in mind, guys, when you guys make this trade, right, it's important that the amount of risk that you take here represents less than 1% of your entire account balance. Okay, so let's say if you have, just in real simple terms, guys, if you have like a $10,000 account, then that red portion, that risk right there, 1% of a $10,000 account is $100. So that risk right there, you should not lose more than $100 on this trade if you have a $10,000 account. If you have a $100,000 account, then it should not be more than $1,000 risk on this trade. Okay, that way we have the opportunity to be wrong 2/3 of the time and still come out at least break even or better on our trades. Okay, so hopefully this video, guys, will help you guys find a good entry. It just so happens that Factom finally is available. The Poloniex data feed for Factom is finally available on TradingView, so I was able to do that. So that was just a sheer luck, guys, that the price happened to hit right here at the intermediate term trend when I decided to do this video, guys. So hopefully this helps you guys out, and then I'll see you guys in the next video. Oh, by the way, guys, if you like these types of videos, make sure you hit the thumbs up. If you guys don't like it, hit the thumbs down. And then if you guys have not subscribed to our channel already, make sure you do. And also leave in the comments, guys, what else you guys want to see me make tutorials on, guys. My friends and I, LeonFood.com and I, we've also been contemplating, because we've getting a lot of requests from people to do like more comprehensive trading and investing tutorials. And the last time we did it live, we tried to test it to do a live like Google Hangout one time, guys, and we had some people that were trolling us, and they would jump in on the free Google Hangout sessions, and I was not fully aware of this because I was busy answering the questions on the live broadcast, and a few guys on the during the Google Hangout was done, they brought it to my attention to be careful about some of the professional trolls. Okay, the amateur trolls, we can recognize them really easy, but they were telling me that some of the professional trolls, they're very professional at trolling people online and doing the live Google Hangouts and stuff. And be careful about them because they kill a lot of time and they ask unnecessary questions and they try to divert the Google Hangout, the trading hangout, in a different path than what my buddy LeonFood.com and I had anticipated. So Leon and I, we like to do live Google Hangouts and with my trading and investing buddies, guys. But we're trying to figure out how to do it so that we don't get caught up with all these trolls, so that we actually spend time helping out our audience and not wasting time answering trolls' questions, you know. So I don't know. We're trying to look at several different ways to do it so that we don't waste our time. One way is we were thinking about maybe having like kind of like an entry fee, like a small entry fee, so that way it forces the trolls. It'll actually cost them to try to troll us, so that way they don't interrupt our live broadcast. Because I personally prefer to do these things live, because sometimes in my head I think that I'm explaining things, but then afterwards, after I post the videos, and I get all these comments from people, that lets me know that maybe I was not so clear in explaining things. So if you guys have any suggestions, guys, on how we can do this as a live broadcast, I would love to be able to do that, and so would Leon Fu. We really get a kick out of these things, and we have fun doing it. So let us know, guys. Okay. I'll see you guys in the next video. All right.